The summit between Donald Trump and President Putin ended not in a disaster, but in some kind of quite a bit of questions, in particular in regards to the population in the Ukraine. They might have lots of question marks why such a big stage had been kind of produced in regards to Putin. But Trump stating that there is a potential peace deal in progress, and talks obviously will continue next week with, in particular, Donald Trump meeting up with Zelensky in the US. Whether this can calm markets is the big question, as currently we observe that market momentum had started to basically weaken slightly. We see that stock markets were rising somewhat actually this current week, but they have not really gone quite substantially to the upside. In particular, we've seen that markets had stalled out at some point, and crypto markets saw quite some interesting momentum as well in the recent couple of trading days. What's happened interesting and important this week is going to be on the economic calendar. Consumer prices out of Canada might move markets. They're expected slightly higher, and that's exactly how the markets might perform medium term, because what we can see is in general that the rise in prices in the US might actually spill over towards the United States, or from the United States to the Canadian side as well, causing potentially a slight strengthening momentum in the Canadian dollar. Now, the loonie, as the Canadian dollar is referred to, had lost sharp motivation. The euro, Canadian dollar, and the dollar against the Canadian had gone up towards way higher levels, and that's currently not expected to basically change direction, right? So the upside here out of our screen to higher levels might actually happen. But first of all, what we could see is that the market momentum might weaken initially. With that, obviously, we could see stronger prices or higher consumer prices out of the US might actually cause the market to weaken somewhat further, potentially offering entry opportunities here in this market, causing maybe a basic kind of weaker market sentiment before the euro against the Canadian dollar would basically start increasing its value. That's for this currency pair. If we are looking further towards the US dollar against the Canadian dollar, we see the same, which is actually currently that the market started, or actually went to push higher, and these higher levels, as we've seen it here, might actually continue maybe towards the 50 moving average. But again, same story. Any basically stronger consumer price on Tuesday would cause basically this currency pair to potentially weaken further, giving initially the Canadian dollar some potential advantage short term at least. Yet, however, if we see kind of in line of expectation or slightly weaker consumer prices, I kind of doubt it, but that could give us the idea and the big question that the market is going to basically start to appreciate further. Dollar CAD moving higher, the euro against the Canadian dollar as well moving towards way higher levels, and with that, obviously, kind of we could see that the market momentum, the market sentiment is gonna continue its way to the upside, as we've seen in the current market trend. Next one up is obviously something important out of New Zealand. We got the Royal Bank of New Zealand's interest rate decision. That's not going to be something utterly important, but there are certain important factors in the Kiwi, the New Zealand US dollar currency pair. That news event is going to happen early for us here in Europe, basically Wednesday, 4 o'clock, 25 basis point rate cut initially would actually help the New Zealand dollar to potentially weaken against the greenback as well as other currencies. However, since this step is being expected, the important factor might be that the expectation is potentially coming true, and hence obviously this is not going to give the New Zealand dollar such a strong negative push. Instead, the market might just weaken slightly only. What we have to see and imagine obviously is kind of the medium-term market motivation. If we are looking at the New Zealand US dollar currency pair, which we do here quite right now, we can see that the trend has been actually weakening, and the 50 moving average that's on the weekly chart, is close by, basically stating and telling us that the market's weakness just below the low points here, we can just put the arrow in as well, might actually cause the market's retracement to lower levels. The kiwi might gear up steam, but it's not quite. The US dollar looks rather set to kind of strengthen somehow. In particular, if you're looking at the longer term chart, we see some remarkable candlestick pattern, and that's why I put the arrow in here. We saw that the market kind of weakened right at these high points here, right? So we have these two candlestick patterns, the blue one, which was bullish, plus the bearish looking one thereafter, indicating that the market trend is kind of paved to a downside motivation. Here, next stop would be that supportive trend line, which had been retested several times in the past. And we see currently that the US dollar's strength might actually kind of cause the markets to weaken further. Plus, what we see as well, a rate cut would enable the markets to weaken further as money flows out, potentially out of New Zealand, with the rate cut happening, actually paving the way for the market's weakness to potentially continue. Long-term trend-wise, we could also drive trend lines here, and we could also look at those figures here and check out how this one had performed in the past. Resistance zones, couple of times tested, and thereafter the market weakness, basically telling us that downside motivation in the New Zealand dollar might indeed be on the cards, showing the market motivation here potentially going to continue. Some interesting facts here, just out of the New Zealand side. If we're looking at it from this perspective, obviously the press conference just an hour later might give us further insights, but the data in general is obviously the key takeaway as we see, and this is exactly how and what we should focus on looking at the next weeks or upcoming weeks information. Out of the UK, we got something important as well. Looking at it from that perspective, we got the consumer price index on Wednesday as well. That's coming out 8 o'clock in the morning. With that, we could see maybe that the market also kind of sees a bit of a revival here. Consumer prices. And again, guys, these are official figures. If you're looking into your own wallet, I've been traveling fairly recently and as well, currently now in the Eurozone. I'm just amazed on how prices have been rising here, not to basically kind of forget about all the other travel and cost expenses we have here in the Eurozone. That said, 3.7% is the expectation, a slight rise as well for the UK. Remember, we had the recent rate cut out of the UK. However, the rate cut was basically deemed less kind of strong because less of the members of the committee were voting for rate cut. So it's a bit of a hawkish sign in this case. Following up with the pound US dollar currency pair. Now we are here at the monthly chart. We see, and I remain in my bearish sentiment here, the market's trend. It wouldn't be a perfect trend line, especially not the way I draw it here. But after the recent rise here, the market kind of fell back to lower levels. And we are at the very same price point right now, where I would say below the low points here, we could see, and let's kind of drive the 50 moving average as a bottom line, as a potential support here. But given that recent strong push to the downside, and now the retracement higher, I still believe that the US dollar, the greenback, would potentially gear up some momentum, driving and rolling these prices back to the lower side here, in line with all other markets, by the way, as well. And if we are looking and focusing on other currency pairs, the euro US dollar has been rising as well. And again, don't forget about it. Donald Trump, right, ever since trust issue, rather quite a ton of expenses in the US, increasing the pressure on the dollar. But we see in general that the trust in the greenback is just still eroding somewhat, and market motivation pushing those trends further to the upside. Plus, looking at the Australian dollar, bringing us to the next topic, and that's more or less the equities market, right? So the risk sentiment had kind of really been undermined fairly recently. No big breakthrough. Who would have expected then that there is one to potentially come? However, not a huge and big breakthrough in regards to the talks. Probably Putin remains on his expectation that some of the areas kind of being captured already remain in his or in Russia's possession moving forward. However, the US said they would push some guarantees kind of to protect the Ukraine as well medium term. So I don't see that there's a huge positive impact at the moment given the talks, but it's not to me to decide upon it. It's just to us as traders and investors to find out opportunities in markets and trade them accordingly. Back to the Aussie, we see the market has been rolling slightly lower, and that's the contradiction in the Australian US dollar currency pair compared to the pound. The Aussie turning somehow weaker. The market is just pushing maybe somehow to lower price levels. It looks at least that this market is just going to push back to the downside again. The market didn't go all the way higher, but went to higher levels a fair bit before now starting to weaken again further. It's looking to me like there is a further push to lower price levels moving forward, and that's obviously what might help pushing the Aussie back to the downside here. The Aussie considerably weaker here. Let's check out the pound. It's just the pound slightly higher, and the euro looks like the strongest is about to close above at some point soon, if the market at least would be able to break the high point in this price environment. Anyways, back to the Aussie. Weakening Australian dollar would also be something important for the equity market. And now we can see there had been some setbacks. This recent or still current trading week had not really ended in a strong push to the upside. Instead, the market went slightly higher, but wasn't really able to kind of basically push much stronger towards higher levels, right? We've seen the market went somehow here to a higher point, but in the end now it looks like we see a potential consolidation phase, and spoken to Mirko fairly recently, he would also say markets might, or he said markets might move even beyond higher price levels as they do, but could also kind of check back to low levels. By the way, just check out our recent video here talking stock markets. Mirko, our in-house dividend expert here at FXStrategies.asia. By the way, guys, if you have any comments or any ideas or questions, leave them please under the video, and just also don't forget to subscribe to our channel. Back to the market here, S&P 500 looking potentially set to basically not run way to upside areas. Instead, it looks like the market will start to correct a little bit, and that's in line with the Nasdaq tech index here. And are we facing the same issues like 2000 when the dot-com bubble burst, right? All these Netscape, Navigator, and all these America Online, among other companies in the end, which were kind of losing and burning quite a ton of market momentum. Are we seeing something similar at the current times? Looking from a negative perspective, we might say, hey, the huge mania in AI, artificial intelligence, is just something which could lead to a bit of a drawdown in markets. Just a couple of companies are kind of more or less the ones driving those indices to the upside, where the general trend in markets have not really kind of seen, or general major smaller companies have not seen the strong demand. That aside, now we see, and looking at it from a technical perspective, the Nasdaq looks maybe as it would start to correct slightly, and that's exactly where we should focus and follow up with the crypto sector in a second. But let's, before we move on further, check out as well what the German DAX is doing, because the index had started to appreciate again this current week, and it's just not looking overly bad, to be honest. We are back up at around the all-time high, and the DAX sees some strong considerable advantage in markets, and I might say the DAX looks actually kind of quite solid, as also the European Euro Stocks index market or index fund looks kind of quite positive as well. Plus, looking towards the US, the Russell 2000 also has some momentum potentially with and in its papers. Anyways, back to the markets here, and what we see, I might say the German index is still looking positively behaving, whereby the US indices might start to potentially correct or weaken somehow. And nothing is complete, obviously, while we haven't spoken, or when we haven't spoken and talked about the crypto space. Ethereum among others, had seen a strong retracement. Now, in our chat group, we debated how to trade the markets accordingly, and we kind of exited the majority of positions. For me, I'm already out in full of Ethereum because I believe that this is now the time that the market will start to correct at first. We see a strong double chop pattern here. The next time I would enter, and that's the recent resistance here, and this resistance, as we know it as traders, might turn into support. So there's still kind of quite a bit of market motivation to the downside to be expected. And on any shorter term time frame, I would start to buy into this market cheaper. So basically, we took profit all the way at and near the high points. The majority of the position I closed near the high point, expecting that a correction is going to happen. And by the way, Cardano, I'm out as well. The only one I'm in at the moment is Solana, and Solana I am still in kind of the majority of the position. The other tokens as well I have already cleared here. But let's observe, depending on how the market performs in regards to the Nasdaq, if the technology index will continue marching higher, obviously, we will also see the crypto space moving to higher levels. But what we see is currently, and that's the Bitcoin market here, it's a strong correction. It's a strong correction of these high points here, and the market starts to saturate slightly. So we see that there is a bit of a kind of a slowing down in this positive momentum, but as long as the market continues towards lower levels here, we would just simply wait and see. It might just be a shorter term correction, but for now, again, as said, I'm out of this market here and just mainly having the Solana token on. Solana, by the way, it looks also set to start correcting here, and that's just off the high point, so we can extrapolate and connect the up buy arrow here to a later point in time. The point, we could say left shoulder head and maybe right shoulder pattern would also be able to give this market some corrective pattern here. However, I still believe that the crypto space has quite a bit of upside momentum to potentially celebrate, so I still remain in my long position, which is in slight profit only currently with Solana, before totally clearing all the other tokens and all other markets in general here. So that's it. And Cardano, I'm still out as well, because the market, when it's retraced here, looks to me that it's just at the moment, at least in a corrective pattern. And as we see, most tokens remain in the same pattern. They are just currently correcting, offering potentially some further market motivation back to lower price levels. Now, this Thursday upcoming week is also going to be quite interesting, because we have an array of data from various jurisdictions. From the German side, we get manufacturing flash PMI data below the 50, right? Services expected with 50.5, slightly higher. That could give the euro a bit of a push if it's kind of being able to rise again to higher levels. The same from the UK, slightly better data in regards to the services sector, obviously kind of something which is in regards to also the inflationary pressure causing the market to potentially move higher. And meanwhile, PMI data out of the US is slightly better here in this case as well. In particular, what we see is now that we see a bit of a retracement here in terms of the services sector. I might say the tariff story, because it's a purchasing manager index, is so-called soft data, and that might kind of be something which is seen as potentially negative, if also kind of missing expectations, like we've seen it quite a few times in the past. That's the majority of data points we have here in markets when focusing and looking up at the economic calendar. But towards the end of the week, we get something interesting in regards to US market motivation. Jackson Hole, the big symposium, financial ministers, all those guys who have a lot to say in terms of the economies in general, traders, market participants, as well as obviously, academics are gathering together and exchanging data. There's not real press conferences, but there's always some data being presented as well during the time as people are talking, obviously, to the press, while all the meetings are happening behind closed doors. But the information kind of coming out of these events is likely going to be market or of market shaping nature, and that might be something which is also what we could take into consideration during the Jackson Hole. There's an elevated expectation in terms of volatility going to happen. Gold prices are kind of quite interesting, impacted by, first of all, also the outcome of Jackson Hole medium term, but short term in this next couple of trading days. So we will see how any talks in regards to the Ukraine war is going to shape markets. The gold price has started to depreciate somehow, which would be a rather good sign for any potential peacekeeping, peacemaking efforts we currently face and see, right? Gold prices starts to weaken. We're currently below the 50 moving average. That's one thing to observe. The trend in general still remains bullish, and the market might still push back to higher levels. However, if we are looking at those markets here, we could see there might be quite a positive figure to come out as well, and causing the market motivation in gold to elevate, depending on how the greenback, how the dollar works, and how the dollar moves, right? So, but in this context here, currently the gold price is looking set to weaken slightly. Is that question mark? Is that something which is just a bit of a preview in regards to dollar strength? Might be the question you have and we have as well. Plus the same story as well happening in silver, and the silver chart is still kind of quite cool and nicely looking. The market closed basically this week so far rather higher, but what we see is this pin bar candlestick pattern seems to kind of leave a bit of a mark here, and the downside momentum in this market is clearly what goes, and the downside is still what we would like to focus up with. Still about 2 trading weeks to come for the month of August, so we still have quite a bit of time here, but again, the downside momentum here expected, especially given the fact that the market ran already all the way towards quite high price levels here, roughly below the $40 zone. We saw the market starting to correct, but obviously if the trust and the issues in regards to the greenback to the US dollar is going to continue, these markets, and this market in particular with silver, would still have quite a bit of room to higher price levels in the next a couple of trading days as well. What else do we have? Apart from these markets, what we have is still the oil market, and what we see is the US oil had continued to push back to a downside level. So this trend looks like it's not going to change, at least for now. US oil, and we were in the short position, we closed it towards Friday's meeting because we saw that there might be some volatile times ahead, especially with the Anchorage talks between Putin and Trump. Downside looks set here to continue. The trend is going to be our friend here. We're looking for entry opportunities again in the next few trading days, right? We saw this here. Thursday, the market moved higher. Friday, back to the downside here. And now we're in no man's land here. But any break of lower price levels is what we like to take into consideration to kind of get access to markets as well. Guys, that's our take here from our side of FXStrategies.asia. We don't have anything much more to say, but we hope that this comprehensive outlook helps you guys as well. Looking forward to see you as well on our website and check out our new information as well there. So stay tuned, take care, have a great remaining weekend. See you then. Bye.